So retirement means less taxes, right? What if I told you when you retire, the taxes you pay in retirement will probably be pretty similar to the taxes you're paying now on your current income? That's right, folks. Uncle Sam does not retire when you retire, but by the end of this video, we're going to break it down super simple. You'll know how to keep more cash in your pocket and to avoid some sneaky tax traps. Hello, ladies and gentlemen, and welcome to the Money Summit. My name is Dallas. I am a financial professional helping people to be financially prepared for the rest of their life. And just like in this video, I often talk about taxes, how to save on it, how to even plan for retirement. What does that even mean? So if you want to be financially prepared and achieve your Money Summit for the future, consider subscribing. But for now, let's jump into the video. All right, here's the deal. Right now, you are working for an employer, you have a W-2 employment, you're salaried, you're getting paid by the hour, or if you're a business owner, you're paying yourself through W-2 employment, through your LLC, whatever. You're getting taxed on your income, federal tax and FICA tax. An important part of that is the FICA tax portion. FICA tax goes towards the Social Security benefits and Medicare benefits. Now, if we fast forward to retirement, no more job, no more earned wages or salary, no more hourly paychecks. We're now collecting from our retirement accounts. And here's the twist. You're still going to have taxes on all of that. Most retirement income is paid out through IRAs, 401ks, other types of retirement accounts like that, Roth IRAs, and of course, Social Security. And when it comes to collecting from retirement accounts, specifically if they are tax-deferred accounts like IRAs, 401ks, 403bs, things of that nature, they are treated just like normal income and will be taxed. The government will tax it just like normal income in retirement. So if you're making $100,000 a year before you retire, you're in a 20% tax bracket, and then you retire collecting $100,000 a year from your various retirement accounts, you're going to be in that same exact 20% tax bracket. Now, tax bracket change from year to year, but you get the idea is what I'm saying. That being said, it really doesn't sound like the tax-free retirement we're led to believe when we sign up and contribute to some of these different things, because we're saving taxes now on our contributions, but you end up paying more taxes in retirement. Before we dive deeper into tactics and strategies of how to save on taxes, there is something that I want to point out. When you are collecting IRA income, 401k withdrawals, things of that nature, you will, of course, be taxed federally, and there will probably be a state tax if you are in a state that charges taxes for income, but there will not be any FICA taxes. So the taxes that you're paying towards Social Security and Medicare, that will not be withheld from IRA and 401k withdrawals, just the federal or state income taxes. First, let's understand how these types of retirement accounts are actually taxed and when they're taxed. For things like IRAs, traditional IRAs, and 401ks, this also includes SEP IRAs for business owners, simple IRAs, which is like a 401k alternative. All of those are what we call tax-deferred retirement accounts. And just like the term implies, tax-deferred means the taxes are deferred. The big benefit to these accounts is that your contributions are like a write-off or a deduction from your salary. So if you're contributing $5,000 a year, your salary is $100,000, you're only paying taxes on $95,000 now because that was taken away from your top salary. Does that make sense? But that same $5,000 times 30, 40 years of employment plus interest and all that, when you're taking it out in retirement, is then taxed. So you didn't pay taxes in the beginning when you contributed, but you will pay taxes on that money in the end when you take it out. And that's what we're talking about, the federal income tax. You're going to pay taxes on that IRA, that 401k withdrawal money, just like a normal salary. Now, here are some cool things with a 401k or Roth IRA that we can take advantage of if you have what's called a Roth IRA or a Roth 401k. Every now and then you come across a Roth 403b with school districts. It's becoming more common, which is a good thing, because when you have a Roth type account, your contributions are contributed after taxes. So this means your money is earning after taxes. It's earning, the interest is tax-free. Therefore, when you collect it, it is 100% tax-free. You do not owe any taxes on that money in retirement. Another thing to think about and consider is your actual Social Security income. A lot of people think when they retire, Social Security is tax-free, which can be in some cases, but if you're drawing income from an IRA, 401k, things that we've been talking about this whole time, that Social Security income is subject to up to an 85% tax, meaning almost 85% of your Social Security benefit is subject to tax based on the tax bracket that you are in. Let me summarize that for you because that probably seems somewhat complicated. If you're getting $2,000 a month in income from Social Security, up to $1,700 of that is subject to tax based on your total income and where you're taking that income from, i.e. the IRAs, 401ks, things of that nature. So if we're using that same example of $100,000 a year and $24,000 of that is coming from Social Security, $2,000 a month, right, from Social Security, up to $1,700 of that per month is subject to that 20% tax bracket, rough calculation that we talked about earlier. So even your Social Security benefit is not 100% tax-free. Another way to help relieve or to distribute taxes in retirement is to mix up how you're getting your contributions. If you're one of those individuals that have already gone all the way through your career, you're getting ready to retire any minute, and all of your funds are locked in IRAs, 401ks, tax-deferred type retirement accounts, you might want to consider converting some of that into Roth accounts. By taking withdrawals or income from tax-deferred accounts, IRAs, or tax-free accounts, Roth IRAs, you're kind of splitting everything up. So let's use that same example. $100,000 a year, you're taking $50,000 from IRAs, you're taking $50,000 from Roth IRAs, you're only paying taxes on that $50,000. Going from $100,000 a year in salary down to $50,000 a year in salary worth of taxable income, that's going to drastically decrease your tax bracket, and then that Social Security benefit may not even be subject to any taxes. Really just depends on how everything pans out at that point in time. Now, I know what you might be thinking. This is ridiculously complicated. There's too many moving parts. I have no idea what's going on. And it might feel like there are a lot of moving parts, and there kind of are, but it really just depends on how you're looking at it. It all comes down to strategy. Just like you and your family sit down every week, probably, and plan out where you're going to eat or what you're going to cook for the week, same thing applies. What are you going to do for retirement? How are you going to get there? It's simple strategy. It's simple planning. Another thing that I hear a lot, and if you made it this far in the video, this is an extreme bonus for you, okay? Another thing I hear a lot is, I do not want to pay taxes at all in retirement, yet these people are usually contributing to tax-deferred entities like pensions, planning on collecting Social Security, traditional IRAs, 401ks. I sound like a broken record here, but hopefully I'm getting the point across. Those same people are also probably some of the ones that say, I don't want to pay any taxes now either. And it's kind of like this. Would you rather pay a little taxes now or double the taxes in retirement? And that's where that Roth conversation comes in. Roth IRAs and even different types of life insurance. We really didn't talk about that. Again, extra bonuses if you made it this far. These are tactics and tricks that you can use to minimize the tax implications in retirement so that you're getting more cash in your pocket. And here's the good news. You don't have to figure all this out on your own. Get with your financial guy or gal, see what their strategies are, see how else they can help you, what other plans or advice they have for you. If you don't have a financial person, get with me. I can help you. I have a link down below. You can get on my calendar, or you can just leave a comment if you have a question. I'd be more than happy to help answer. For now, I'll just say keep going, keep working, and never stop learning. I hope all is well, and God bless.